Now, the first thing that we're doing is we're talking about daily routine. And we are discussing what the difference is for an investor, for a position trader, for a swing trader, and for a day trader. Okay? And daily routine is an important thing that every one of us have. Number one, an investor's daily routine is probably very different than a day trader's. There's no question about that, because the way that you trade will change. You know, a position trader, maybe there's subtle differences. A swing trader, maybe there are other differences. Okay, and a day trader, maybe even final differences. So when it comes to daily routine, we have to first identify what steps do we need to take. What steps do we need to take each and every day? And you could also make this a weekly routine or a monthly routine or whatever you want to call it. The first thing is gathering the news. Okay, and then conducting, number two, market analysis. Number three, we need to also manage positions. Number four, enter new trades. And then number five, journal, review, research. We'll put that all into one general area. Okay. So let's take each area one at a time, and my OCD brain will not like that. I'm going to move that right here. Okay. Let's start as the investor. Obviously, where you get the news and what news you look at is very different as an investor than as a day trader. The news may come from different sources. There are a couple of things that I would say. Number one, you're going to look more for long-term. You're going to look at market behavior. And I'm going to reduce this down just a little bit. Okay, so more long-term news. You know, what is impacting the market, Federal Reserve, more news around potentially, you know, fundamentals instead of just technicals. You're going to look at macro trends, you know, GDP, corporate profits, valuation of currency, things like that. You know, and by the way, does this have anything to do with whether or not we're looking at commodities or stock or, you know, options or anything like that? No. These are mindsets. These are time frames. Whether you're a Forex trader or a futures trader or whether you're a stock trader, investing, position trading, swing trading, day trading, that's simply time frame. So it applies to any product that we're thinking about out there. When we look at the news as an investor, it's all about strength of the economy. Okay, where are we at? What is driving us? Things like that. Market analysis. Market analysis for an investor is probably going to be on a weekly chart. See, and so you might look at the same chart as a day trader, but the chart on the euro dollar, if you're an investor, what's happening on a 5-minute chart may not matter to you, okay? You know, you may look at the weekly chart instead of the 5-minute chart to get a feel for what's happening on your currency position or on your stock position or whatever it might be. Managing positions. Generally, investors do this more with insurance, long-term plans, and deeper stops if they have them. You know, a good example of this is the can slim method from IBD users. They tend to go about 8% down from where they pick their stocks. Not below the current candlestick, not anything like that. The mindset of an investor is very different, okay, which also means that your position sizing should be very different. Entering new trades. You know, new trades comes from more methodical research and balanced research. Okay. Now you may think, Tim, I try to be methodical and balanced in every time I take a trade. Well, I'm sure that you do, but investors really are a little bit more patient. They really wait for that stars and the moon to kind of align before they start to get into a trade, or they even just build into a position slowly over time. Now, is being an investor a bad thing? No, it's not. It can be a very, very good thing. I'm going to review, just for those who are watching on replay here, I'm going to review this just a little bit. So we're talking about daily routine. The topic of the day is daily routine. And the first area of this topic that we're looking at is, what does it mean to be an investor? Okay. And my daughter had a rainbow party over the weekend for her 4th birthday. So I'm going to try to think of the color wheel. What's the first color in the color wheel? Is it, now I may be colorblind. Is it red? All right. Yeah, red. Okay. So we'll do this by color wheel. So we're first going through at being an investor. So you've got long-term fundamentals. You've got a weekly chart. When you're doing your news, you're looking more not just at the technicals. The technicals do matter. I would also just put in here valuation. Okay, valuation. So we've got long-term fundamentals. Now, the next area, when it comes to investing and trading, is journaling and review and research. You don't necessarily do this daily, okay? This may be done weekly, or over time. Many times you're going to rely on other publications. You're going to rely on trusted sources. You maybe even have a paid broker to help you identify, where you're going to be getting in. Investing is a great thing. Now, by the way, there is not one preferred column for everybody out there. There's not a one-size-fits-all solution. In fact, many people will do more than one thing over time. Remember, being a day trader means you're in for minutes or hours. Being a swing trader means you're in for days to weeks. Being a position trader means you're in for weeks to months, and being an investor is as long as it's working. Okay, so investing, when it comes to your routine, you're going to think about the market just a little bit differently. All right, now position traders. Okay, position traders. Yes, I will continue the color wheel. I'm going to have to think about this as we go all the way through the color wheel here. We'll see if we can get there. Position traders. Okay. Now, when you're thinking about news as a position trader, you're going to look at probably, daily information from the market. You need to consider global, and yellow is not going to work as a text. So why don't we do purple as a text. You're going to need to see global news. You're going to consider the 24-hour market cycle. You're going to look on the chart analysis, and you're going to look at both fundamental and technical. It's going to be a mix of the two. When it comes to market analysis, I would say that you're going to look at a mix of the weekly and daily chart. Position traders, and from a time frame standpoint, they tend to be in for, weeks to months. You might buy a stock or an ETF and plan on holding it for a couple of months. If you're a position trader, you're looking at that as a longer term opportunity relative to day trading. Now, and a lot of people look at these different areas and they say, Tim, I have to be a day trader. That is my nature. That is who I am. Or, Tim, I have to be a swing trader. Or I have to be a position trader. And the caution I would give you there is, number one, you don't have to be anything. You can be all things, okay? There are certain things that maybe you treat as a day trading product, okay? Maybe you trade Forex as a day trader. Maybe you trade stock as a swing trader, or options as a position trader, and in investing you get into ETFs and longer term holds. There's a lot of different ways that you can do it. There's not a one size fits all, not for everybody out there, and even not for yourself. You you don't have to just pin yourself into one area. But each and every area that you do decide to get into and to start working on, you have to kind of come up with a plan for that area. Okay, so back to what we're talking about here. So position traders, they look at global news. They look at the 24-hour market cycle. They consider what's happening in Asia and in Europe and in North America when they're making decisions. They look at sector trends. I'm going to add that in there. Okay, I'm going to add in sectors. Sector rotation and seasonality, seasons. Okay. Now, the position trader, when you're looking at your market analysis, you're going to look at a weekly and a daily chart. Now, when you manage your positions, you're going to have a mix of stop losses, hedges, and adjustments. What that means is you're not always going to put a stop loss on the low of the candlestick. See, when it comes down to this scale, I'm already starting to really enjoy this conversation. This is an important one. To where you, between a day trader and an investor, okay, day trader, swing trader, position trader, and investor. When it comes down to this scale of where you're at and how you're dealing with the marketplace, there's a couple things to remember. Number one is the role of fundamental and technical analysis changes. Okay, and let's do a different, I'm in a color mood here. So the importance of technical and fundamental in these two areas. Now, let's think about this. If you're a day trader, then I would say the technicals absolutely mean the most. Okay? For day traders, technicals are going to mean the most. For swing traders, it's going to be the second amount. For position traders, it still is very much important. Start with the chart. For investors, out of all of them, it is of the least importance. Okay? And this is the importance of technicals. When it comes to fundamentals, whether we use that as our analysis, well, the most important is now for the investor. Okay? Then the position trader, then the swing trader, and the very fewest is day trading. It doesn't mean as much. So what analysis do we conduct depends on our time frame. Time frame is important. You know, this scale from time frame to time frame to time frame is very important. So this conversation we're having, we kind of have to pin this part of it down. When do we enter new trades as a position trader? It just is either daily or weekly. It's really mixed. Okay? You do it over time. You essentially you wait for key opportunities. Now you may be thinking, well, Tim, I always wait for key opportunities. Not as a day trader necessarily. It's a different mindset. See, day traders try to get in there and kind of at least scalp a few pips. They try to do something with their portfolio. They try to do something each and every day. Journaling, review, and research, I would say weekly is when you do it. Okay, weekly. So when it comes to position trading, you know, there's a different mindset. You know, you don't necessarily even trade every single day. You kind of do it over time as the market develops. You're still connected to the markets. You know, investing is still a very big part of what you do. The investor may not even look at the market some weeks. You know, you might glance at your accounts in the morning for 5 minutes. Some days you might spend 3 or 4 hours. Investing is a completely different animal. Okay? Investing is a completely different animal. Now, let me see here. And clearly I am not colorblind. For those of you who are, I have empathy for that. But I am not. I like colors. All right, swing trading. Okay, red, orange, yellow. What are we next? We're green, right? Green, yeah. Green for swing trading. Okay, swing trader. Well, the swing trader is the most common new type of trader, by the way. You'll get a lot of people come in and say, well, I want to be a swing trader. I want to be a swing trader, and I understand that. I'll say, okay, well, what are you going to do to make sure that you build your swing trading skill set? Why is it you want to be a swing trader? I have a lot of new clients who come into my office, and I'm a mentor, and I work with them one-on-one, and I'm teaching them how to do this. And by the way, I see myself doing all of these things. It just depends on the different area of the market. And they'll ask me, well, Tim, show me how to do a swing trade. Or, Tim, I really want to learn how to day trade. And I'll look at their situation in their life, and I'll give them just honest advice, and I'll say, you have no business doing that. Or maybe this should only be about 2 or 3% of your focus. See, sometimes we get really excited about, playing this game we call trading, but we're not necessarily thinking about the big picture of how do I want this to fit in my life. Swing trading, you have to look at the news daily. Daily and broad-based. Okay, you look at everything in the news. You go through what is happening out there. We have to understand market posture. Market analysis is done on the daily and hourly chart. We manage positions daily and on pretty finite systems, or what we'll call defined systems. Now you may think, well, Tim, isn't every system defined? Not as rigidly as, say, the shorter term traders. A swing traders is really going to be a technically defined system, okay, where a position trader may have different adjustment capabilities or the ability to hedge or whatever you want to name it. Now, when we enter new trades, how are we going to do that? Well, we're probably going to do it on a mix of two things, okay, and we're going to do it on watch list and scanning. Swing traders should all have pretty good watch lists, but they should also be able to use tools to go out and find candidates in the market and say, what am I going to do with this position here today? Journaling and review is done daily. Essentially, a swing trader, your job is to log in pretty much every day, check your portfolio, apply your rules, and move on. And when you're not doing that, then you need to not really be able to be in positions. When you're going on vacation or something like that, you're going to be gone for 5 or 6 days, then you might leave in your investor positions or your position trader positions, but your swing trades probably need to be taken out or really set up automatically. Now, the day trader, and yes, I do know the next one is blue. The day trader is a time frame that not everybody should want to work with. But some people are going to do it in such a good way, and some people like the control. The news is obviously right now. What is happening right now, period. What is going on, or this tomorrow and this week. You kind of take a peek ahead at what may be coming up tomorrow. Your market analysis is done on the 24-hour market cycle, and you have to know intraday patterns, okay? You have to know what happens. Here's a simple idea. If you trade Forex and you don't know when the Tokyo banks open, then you're not skilled enough yet to be what we would call a polished Forex trader. If you trade Forex and you're not sure if there's a big news event in Europe, then you're not doing your job. See, day traders that trade international currency have to have an idea of what's happening globally. That doesn't mean you're an expert in the economy. You don't have to be an economist to be a trader, but you have to be aware if there are things happening around the world. Okay, market analysis is also done on the 5, 15, and hourly charts. So you're gonna when it comes to your charting, it's gonna be a lot tighter. You manage your positions, either exit before leaving or have an auto system. That could be a trail stop or some kind of automated trading system. And when you enter new trades is right in front of you or through triggers, and that's what I'm going to call that advanced orders. Your journal and review is obviously at the end of each session. Okay. Now let's take each one of these areas and let's really think about it. If you're going to be a day trader, what skill sets do you need to have? Okay. If you're going to be a position trader, what skill sets do you need to have? If you're going to be a good swing trader, well, let's bring up a new, we're going to call this characteristics of good traders. Now, by the way, these characteristics may apply to different areas, but this is what I've seen over time. So let's start backwards. We've been doing it investor first. Let's start as a day trader. Okay. I believe that a day trader must be systematic, be disciplined, have some good computer skills, I believe that you need to have good judgment. You need to be a very disciplined with your money, good money management, or I'm going to say it like this. You can't risk too much. You have to, abide by money management systems. Some day traders end up getting out of whack because they try to trade everything they see, and I'm actually going to say patient. Very good day traders don't just get in there and start clicking buttons like they're playing a first-person shooter video game. Okay, very good day traders know their signal, know their system, they wait for it, they plan for it, they trade it, they get out. I think day trading is one of those skills that you have to have the ability to step back from the market and say, is this even a good day to trade today? See, being a day trader doesn't mean every time you turn your computer on, you're going to take 100 trades. Not necessarily. There are different systems. So day traders. Now, swing traders, okay, to be a good swing trader, I really think if you're going to be a great swing trader, you have to have an understanding of inter-market analysis, in addition to the things above, by the way. I believe that you also need to have a good watch list. I think that you need to use more than one product most often, but not necessarily. That's going to get more into position trading. I think to be a good swing trader, you also have to understand the weekly market cycle. You need to be able to read the economic calendar. And you have to know your strategies. Okay, exactly what are you going to do, why, when, how, what. Now, the next one, what does it take to be a good position trader? Well, to be a very good position trader, I believe that you need to be patient. You need to not overanalyze. You need to base your decision making on systems, decision making. You don't micromanage, okay? And you have to rely on long-term distribution of results, okay? Position trading, one of the hardest things, because position trading is a wonderful way to trade. But essentially, to be a really good position trader, you have to have the ability to kind of step back and say, it's okay that my strategy lost me money this month. because I believe in my back testing or my history or my experience that it will make me money over time. New traders have a hard time position trading. Okay, and the reason is, especially analytical types, some people come into the market, and if they don't win when they click the button, it can be frustrating. Okay, let's think about that. Because here's the thing, we're used to life where we hope that there's logic in each and every situation. So if we follow our rules, we click the right buttons, and we execute perfectly, but we still lose money, some people lose their mind over that. Okay, I don't know how else to say it. Some people do. They're like, well, how is that even possible? I followed my rules. I clicked the right buttons. I executed based on all the strategies and all the classes I've taken. Position traders know that market conditions don't have a correlation between the two things all of the time. Good position traders know that you have to understand long-term distribution. It comes down to probability and distribution. I live here in a state in the United States called Utah, and Utah is a very conservative and Republican state. Essentially, we voted for Republicans for about 45, 50 years. And we vote for them consistently in most of the state. There are a few pockets like downtown that does not and whatnot, and Park City and some of these other areas. Well, if I walked outside of my door in my neighborhood that I lived in, and I turned right, and I put the little polling hat on, and I had a clipboard and a pencil, and I went down, I started knocking on my neighbors' doors. And I said, okay, are you going to vote for a Republican or a Democrat? Whatever election. And the first one would say Republican, I would check it off. The next one would say Republican, I would check it off. The next one would say Republican, I would check it off. The next one might say Democrat, so 3 out of 4, and I'd get all my numbers, right? Well, I happen to know my neighborhood well enough because I've lived here long enough that if I went out my door and I turned left, it would say Democrat, 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 Democrat. 4 or 5 houses in a row. Does that mean I live in a Democratic state because 5 of my neighbors are Democrats? Think about it. If you've taken any statistics class in your life, or if you just use common sense logic, if you just click the button a few times, even if you do follow your rules and click the right buttons and execute perfectly, you absolutely can still lose money. The question is, how long are you willing to do that and still stick to your trading guns, still stick to your investing strategy, still stick to the same rules? Well, position traders tend to be the kind of trader that has done enough testing, or they have enough experience, or they have enough patience to still confidently pull the trigger when their trade happens. New traders have a hard time with position trading, okay? It's because they end up overanalyzing. You don't want to overanalyze. You got to make sure that you have systems, and you have to rely on long-term distributions of results. For example, there's a thing called a Christmas trade. And the Christmas trade is essentially based on this. Markets tend to usually go up around Christmas. So if this year I decided to go long the market on my day that I usually make the Christmas trade, and get out of the market on the day that I usually get out of the Christmas trade, and I lose money this year, does that mean I should not take the trade next year, right? No, of course not. See, but that's experience. Those are different mindsets. And then what other characteristics do we need to be a good investor? That's the last one. That's a different animal, isn't it? The investor, I think that you've got to have a cool confidence about you, okay? I really believe you also need other sources of income. I mean, think about it. If you're investing in something, you're not necessarily pulling the money out of it right away, are you? Okay. You got to have a cool confidence. You have to have other sources of income. You have to have a patience about you. You have to be a big picture thinker. And you also have to have systems, and all of the above require good money management. Okay? Now look at those characteristics. Now, I probably left a few of them off. I'm just kind of thinking out loud here this morning. But look at those characteristics. Which one most describes where you're at right now or where you want to go? What you want to do. Okay? Do you want to be a day trader? Let's kind of review all of these different areas. Very good conversation here. Do you want to be a day trader that's right now, based on tomorrow, this week, looking at the 5, 15, and hourly charts where you exit before leaving or having an auto system, where you put your trades on right in front of you through triggers and advanced orders? Okay? Do you want to be at the end of the session? If you're a swing trader, do you want to do it daily and on broad-based news, on the daily and hourly chart, based on defined systems with watch lists and scanning? Do you want to be a position trader that uses global news, the 24-hour market cycle, a mix of fundamentals and technicals, sector rotation, seasons? You have different management styles through different trading avenues, a little bit more advanced, I would say. Well, by the way, that's not even accurate. They're all advanced or simple depending on the system. Or do you want to be the investor that looks at long-term, fundamentals, valuation, weekly? Okay? Which one is best? Have we thought about that? None of them are best. It's best to have a system that you've defined that you're very comfortable with. Because depending on your schedule and your lifestyle might dictate what kind of trader you are. Your ability to read technicals or fundamentals may dictate how you approach the market. Okay? Your characteristics of how you are as a person might slot you into a certain category. But also remember, you have to have the patience and the ability to know that if you follow your rules, you execute perfectly, and you click the right buttons, can you take a losing trade and still move your system forward with confidence? If you can't, by the way, if this is a deal breaker for you, then what you absolutely 100% need is simply more testing. More testing, back testing, rules, design, and structure. Because if losing because you took one trade makes you question everything you're doing, it just means you're a new trader. There's nothing wrong with that. You should question it if you don't have the confidence, right? I'm not saying just go out there and be willing to lose money. In fact, the exact opposite. It's just an indicator. It's a litmus test. Because one trade for a savvy, seasoned, disciplined investor, they're going to continue to follow the rules. One position trade, I'm going to continue to follow my rules. One swing trade, I'm going to continue to follow my rules. One day trade, I'm not going to decide to stop being a day trader tomorrow in Forex because I missed one trade today, right? So there are different mindsets that we have. I think it's important that you develop an identity. It's not mandatory that you have the same identity for everything you do. This will be the last way, and then we'll kind of go over some questions and whatnot. Think about the different capital markets. Okay, Forex, currency, right? Okay, commodities. Actually, let's do this. Forex/currency, futures or commodities, equity or shares or ownership or companies, I'm going to say. Okay. Options, or what we call insurance, real estate, property, and fixed income or debt. These are the capital markets. These are the things that I tend to focus on myself. There are other opportunities, I'm sure, that I'm not thinking about right now. But these are some of the major ones. Is it possible, just as a hypothetical, that with different areas of the capital markets, you may be a trader, an investor, a swing trader, a position trader, so on and so forth? Absolutely. Of course. Okay. See, this is why labels aren't that critical. The way you trade is going to be different depending on the capital market that you approach. See, with Forex, for example, I can speak for myself, the way I think about stuff. I'm more of a day trader, day swing trader myself. Okay, with futures and commodities, I am all of the above. Okay, I do day, not as many swing trades actually, position and investor. Okay, with equity, with companies, all of the above, right? You know, and each of you would have your own answer to this. But for me, with equity in companies, sometimes I'll day trade it, very rarely, so I'll leave that one off maybe. Swing, position, and investor. See, you might have a different approach depending on the area. Options. Options for me is usually position, actually, because I don't really scalp them like some people do. I usually use them for position trades, weeks to months. In general, there's always an exception to your rule, right? Position and investor. Property, real estate. Are we going to day trade real estate? I haven't seen that in the book yet. Okay. Probably not. So for real estate, for me, it's more of an investor. Now, some people in the real estate game, because they know how to do it, might be a position trader. Maybe they get in for a few months, they kind of flip a property or something. They could position trade it, right? For me, it's actually none. I haven't gotten into real estate since I was a kid. I grew up a builder's son. This is an area, for me to target. For target in 2016, I want to do something with real estate. Fixed income. For me personally, not interested. The debt market doesn't really give you a lot of money right now. But how you approach it might depend on the market, correct? Probably more of an investor's market. See, this is important from a long-term perspective, because how you trade and what you trade and why you trade comes back to having an appropriate mindset. It's a lot easier. I live in mountain country, okay? I live here in the mountains, and it is a lot easier to take a long hike up a long trail if you know where the destination is. If you just start walking through the hills and you don't know what's over that ridge and you don't know where you're going and you don't know how far it is and you don't know if you have enough supplies, then it's a lot easier to kind of get frustrated and maybe even give up and turn back at times. But even if you're not there yet, as long as you know what the long-term destination of what you're trying to become is, how do I want to polish myself up? What do I want to be as a trader, as an investor? How do I approach the capital markets? You're much more likely to succeed, okay?
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.